What's going on, team? It's Caddy with Money Investing. I hope that you all are having an amazing day. So in this video, we will be talking about the S&P 500 and the Nasdaq index to map out some key support and resistance levels. We'll do some technical analysis and talk exactly what happened in the markets today and where can we see the markets going in the near future. As always, if you guys enjoyed this video, please make sure to drop a like. It really helps out with the channel and recommends this video to other people who might be interested in watching. Also, make sure that you subscribe and hit that notification bell so you don't miss out on any future market updates and videos related to investing and or technical breakdowns. So what a brutal day in the markets today. The S&P 500 dropping close to 3.5%. The Nasdaq was down even more, close to 5%, and the Dow Jones shedding over 800 points and dropping over 2.78%. The futures are down again. The S&P 500 futures is down over 0.5%, and the Nasdaq futures are down over 1%. So it's looking like another red day tomorrow. So now looking at these stocks, you guys will notice Zoom down close to 10%, Nvidia down over 9%, Tesla down over 9%, AMD down over 8.5%, Apple over 8%, Microsoft over 6%, Square, Tilio, Shopify all in the red over 5 to 6%, Google down over 5%, Netflix down in the negative over almost 5%, Best Buy down over 4%, Twitter, Amazon, Salesforce, DraftKings, Facebook, Intel, eBay, Visa, SPY, Boeing, everything just red across the board. So it was absolutely a crazy day in the markets, and you guys can see my portfolio right here, and I'm down just over 3% on the day, or a little bit over $1,500 on the day as well. So definitely a very crazy day in the markets with a lot of selling momentum. But first and foremost, talking a little bit from a technical standpoint, we understand that the markets in general and tech more specifically has seen such a significant rally over the last few months. The RSI was overextended, the valuations were getting a little overstretched, the fundamentals or value didn't seem to make a lot of sense anymore. So it's a healthy correction in my opinion, and no doubt there was something like this on the horizon that we were expecting to begin with. Now, to add to the pain, we have the Federal Reserve essentially setting in the reality for people and the economy in general. Unemployment claims dipped below the million mark. On top of that, we have over 700,000 people that were quote-unquote self-employed file for the unemployment benefits, which was even greater than prior weeks, which makes things a little bit worse than before. Now, the low inflation rate, the eviction stop from the CDC on tenants, and the rent forbearance, all of that creates a very uncertain market environment and doesn't give us a very good future guidance for the markets, and that essentially is what is creating a little bit of a panic in the S&P 500 and the markets in general. So we will go over the VIX indicator as well. That is the volatility index that essentially goes over how much fear there is in the market and where the sentiment stands when it comes down to the stock market in general. Now, talking a little bit about the corporate tax rate, not to get too political, but in the next 60 days, within the next 60 days, we're going to have the elections underway, and a possible Democratic presidency, Senate, and control over the House could potentially increase the corporate tax rate from 21 to 28%, which will almost instantly reduce the earnings per share for all the corporations in America and the United States, which could potentially lead to a further sell-off in the markets because of the lower valuations. So now, talking about the S&P 500 in general, if I were to bring out the RSI and the MACD, we have already gone over the fact how overextended everything had become in terms of the valuations, in terms of the price action, the technical standpoint, the RSI, the MACD, and all the support and resistance levels. So this, in my opinion, seems to be a very healthy pullback. And I'd also mentioned that right now there is no guarantee where the market's going to pull back to and where the next resistance is going to be, because this is price discovery at this point, because the S&P has never interacted at these levels ever before, right? So if you were to look back, you'll notice that this right here was the high from back in January and February. So we have never been in this price range. So we need to get familiar with how S&P interacts with that price targets, and where the bears and the sellers essentially start selling or shorting, and where we see all the other people, hedge funds, mutual funds, start taking profits for the S&P 500 in general. That being said, that level is going to now sit at the high for this candle, which is going to be at 35.88. So that right about there, that's going to be the all-time high and the next resistance for the S&P 500. And based on previous patterns, I could personally see another drop in the S&P 500 close to 1.5 to 2% down to the next resistance, which in my opinion could start to become a new support, which is sitting at right at the 50 EMA, which is the yellow line you guys see. So this right here is the 50 exponential moving average, which is sitting right at 3,400, right? So if I were to kind of show you guys this right here, the previous resistance, in my opinion, could potentially start acting as a new support along with the 50 exponential moving average, which is sitting right there, which is going to again be a drop of close to 1.5 to 2% from its current levels at 34.55. Again, it was down over 3.5% on the day. Absolutely brutal. If you were to kind of scroll down, you'll notice on the month we're still up over 3%. On the last 3 months, we're up close to over 8%. In the last 6 months, the S&P is up over 16%. Year to date, we're up just about 7%. In the last 1 year, we're up 16%. But I read across the board, and we did see some type of rotation out of tech and some other sectors into companies like Delta, Verizon, American Airlines, and cruise lines in general, right? So RCL, Norwegian, and Carnival, they were all up over 2, 3, or even 5% on the day. So that right there is going to be the quick technical breakdown on the S&P 500. This was expected, and I would not be surprised if you do see another red Friday. The markets are going to be closed on Monday in observance of the Labor Day weekend. So I hope you guys have a long 3-day weekend. But that being said, I would not be surprised if you do see a pullback down to 3,400, which is going to be a drop of another 1.5 to 2%. But in general, I did cover a video going over should you or should you not buy at all-time highs. And historically, we've seen the S&P 500 have these minor pullbacks, corrections, and then essentially go up, hit all-time highs, and come back, recover those losses stronger than ever. So now going over the VIX indicator, which is going to again be the volatility of the markets, you guys will notice that we have covered this in the past, and this right here was the spike from back in March, right? So when this whole pandemic started, the VIX was essentially trading back on February at around 13 to 14 level, and essentially spiked over 540%, trading all the way as high as 85. And then over the next few months, you'll notice how it kind of died down. So the volatility in general was not as high as the pandemic level. So going back as far as June, it died down all the way to 25, where it essentially found a really solid support. Then we saw another spike in volatility when the VIX jumped over 85%, and that's when the S&P 500 essentially pulled back. I think it was over 10 or 11% in a matter of 2 to 3 days. Over the next few days, you'll kind of notice that it kind of died down again, and it was pulling back, finding support. So these trend lines that you guys see, the horizontal lines, this is all the analysis we've already done in all of my previous videos, which you're more than welcome to watch. And I had mentioned the 20 level, which has previously acted as some strong resistance, to now acting as some type of a support. The VIX index essentially found support there, and then right now it's at 33.6, hitting highs of 35, and it jumped close to over 64%, which is why we're seeing such a huge sell-off in the markets in general, which essentially means that there is a lot of uncertainty in the markets, and the sentiment in general is a little bit more bearish than it is bullish on the markets. Moving forward, I could see another push higher to about 44 to 45. So kind of like here, which has previously acted as a really strong resistance for the VIX index. So if we do see another push higher in the VIX from its current levels at 33.6 up to 44 to 45, that's going to be a jump of another 26 to 27% for the VIX index, and then a drop on the S&P 500 and Nasdaq of close to 1.5 to even 2.5%. But again, over the long term, I am not concerned or worried about the markets in general. As long as you're consistently putting money away and you have a really good strategy for investing for the long term, this should not bother you. Again, these are really good buying opportunities in my opinion. The market will correct itself every now and then. So again, if you are investing for the long term, this is nothing but a really good buying opportunity for you and I. So that being said, now jumping over the Nasdaq index, which is going to be ticker symbol IXIC. Again, you guys can see that it's down close to about 5%. The ES1 is the S&P 500 futures, now down close to 1%, and the Nasdaq futures is down even more, close to over 1.5%. So again, it's looking like a red day tomorrow. But this right here is the technical analysis for the Nasdaq, and I'd mentioned that we have been essentially trading in between this range, kind of like hitting highs, pulling back to this ascending low, hitting highs again, pushing up, pulling back, pushing up, pulling back, and kind of like trading in between this range. So for the Nasdaq, I would not be surprised if we see another pullback down to this level of 11,100. So that's going to be a drop of over 3%. So if I were to extend this resistance line, that's where I see the next support, right? So if I were to kind of zoom in, you'll notice that we have previously gone rejected at this resistance. Again, going back as far as August 13th, we had a double top until finally the Nasdaq broke out, hit this resistance, right? So we are hitting some type of a higher high, and then if you do pull back, this old resistance could act as a really strong support, and even this ascending low could act as a really strong support where we have previously bounced off, all right? So you're going back as far as June 11th, and then once again on June 29th, so the last week of June, we essentially bounced off of this higher low. So that's kind of like the game plan. Again, I would not be worried or concerned. I know that there are some macroeconomic factors and indicators and different variables that could potentially lead up to a further sell-off. But that being said, in general, historically speaking, the markets are resilient and they do come back stronger than ever and hit new all-time highs. As always, if you guys enjoyed this video, please make sure to drop a like. It really helps out with the channel and recommends this video to other people who might be interested in watching. Also, make sure that you subscribe and hit that notification bell so you don't miss out on any future market updates and videos related to investing and or technical breakdowns. As always, happy investing, and I will see you guys in the next video.